Good afternoon, everyone, and welcome to Stock Market Today. It is Wednesday, December 22nd, 2021, and I'm Justin Nielsen, joined by Ed Carson today while Alyssa is on vacation. And on the show today, we're going to be talking about a very strong market. Is the Santa Claus rally for real and to be believed? And also, we'll talk about a few stocks. We'll go into Tesla getting back above the $1,000 level, and also Fortinet and the computer security software, and finally Icon, ICLR, which has shown a breakout today. So Ed, let's go ahead and start out with the NASDAQ composite. I mean, market overall very strong, closing at the highs. We had the composite up 1.2%, the S&P 500 also up 1%, and the Dow Jones Industrial Average a little bit less, about 0.75%, and the Russell a little bit more than that, about 0.85%. So strong day, and the NASDAQ is bumping right up to that 50-day moving average line, actually a little bit above it at the close by my count.
So yeah, that's really nice to see. I mean, you were talking about on IBD Live, it wouldn't be the worst. I mean, I think to pause for a few days a little bit and then break through, because that would really show how important this resistance area is. 50-day line, trend line. You can see that we've come up there before. We've come up there a couple of times. I mean, obviously that's why the trend line is what it is, but we come up there and then that's where we hit trouble. So I think this is going to be a key area. It doesn't mean that we have to break through it today, I mean tomorrow. I mean, really get through it, but eventually you want to see this level. I think we've had a bounce. If you took some early buys, you might want to wait for sure to get past this level to add anything else, because this is a key area. We could easily hit resistance and head down again, just like we've done a couple other times in December.
Yeah, it's really been that volatility that's been kind of killing things a little bit lately. It's one of those where you get these strong days, and if you're out of the market, you feel like you have to get some more exposure, and then you're immediately met by selling. I was seeing some information from the Dow Jones team that this was the most volatile December since 2018, and the average daily move was 1.5 for December so far. Back in December 2018, it was 1.69, and so this is the most volatile month we've had since September 2020, where that was the a short-term top in the market. So certainly that volatility has been an issue, and I think, as you said, Ed, the idea here is if we can just get some progress in our stocks before we add too much more. It's that kind of letting the market pull you in that really can help you out, instead of trying to plunge in and then sell everything at the first moment of panic.
I mean, part of the thing about why we talk about uptrends, it's like, I know it seems simplistic, but when you think about it, it's because you expect the market and stocks to trend up. I mean, and in this kind of situation, it's a guessing game. Okay, do you buy on the first day because you want to get in low, because you're worried about a short-term run? Well, we have plenty of one and done days. Well, now it's up at this resistance area. Okay, now it's showing momentum. Do you buy here? Well, this might be where it hits resistance, and so you just don't know. And maybe it works out. Maybe this is the time that it moves higher. I mean, it certainly could, but it's just a guessing game. It's just much easier to trade when the market is clearly trending higher, and then you buy at a good point. Your odds are much higher that the stock is going to work.
And if this is a rally that's going to last, you have time, right? If this is a rally that's going to last, it's these shorter rallies with a lot of rotation. That's where it can be very hard to sit on the sidelines, because you're like, oh, it's only going to last 2 days. If I'm not in there on day one, I'm going to miss it completely. Let's go ahead and turn our attention over to the S&P 500, just because this index is showing a little bit more strength, even though it wasn't up as much as the NASDAQ today. This got above its 50-day moving average line already, and is just kind of piling on those gains, and cleared its 21-day moving average line today.
Yeah, and this is the index for why we are still really in a market rally and not a correction, because the NASDAQ undercut on Monday. The S&P, while it did not act well, has not undercut those lows. So this is still a market rally because of the S&P. It's really not that far from all-time highs, certainly not from closing highs. Could really do that pretty easily. So it's acting well. This is nice to see. Can it continue? We can see it's been volatile as well. It's not like this has been tame. It just hasn't been as whippy as the NASDAQ.
And we might as well take a look at the Russell 2000. We can go ahead and look at IWM, which is the iShares Russell 2000 ETF. This has been the laggard index, still below the 50-day moving average line, still below its 200-day moving average line. Really, almost any moving average line you pick, it's been below that, but it's starting to creep back up to some of those shorter term moving average lines after it was, again, showing a lot of lagging action.
Yeah, and this is a reflection of market breadth. I mean, we've winners trumped losers for a second straight day, but that has not been the case for most of the last several weeks. And honestly, for the last several months, there's been a lot of weakness in the advanced decline line. So, you want to see that market breadth. There is some market leadership that's emerging, but a lot of it's just like some of the stocks we'll look at. Are they just starting to round into shape, but they're not really leading? They're like, you can wish and hope that they will. But there's still some weak market breadth, and investors should just be aware of that. Even if we do pick up steam in the indexes, we still may have that underlying problem of market breadth going forward.
Yeah, as of yesterday, still only 30%, less than 30% of stocks were above their 50-day moving average line. Looks like about 38% of stocks were above their 200-day moving average line. Those are pretty low numbers. So hopefully some of that will improve after today's data comes in, but it's still one of the reasons to be cautious is, the indexes were masking a lot of this weakness, and there's a lot of destruction underneath the surface in the individual stocks. Speaking of which, why don't we go ahead and start taking a look at some? And for a while there, it seemed like as Tesla went, so did the market. And if that's the case, Tesla's showing some new life. What do you think of Tesla right here?
Well, this was the biggest performer on the S&P 500, and I'm sure it was a big reason for the Nasdaq's gain and outperformance. Nice action, but not the only thing. So it wasn't just Tesla. So, this is nice action. I mean, we've seen that before. It's like if it rises any further, I think you might see a base be there. I mean, it's long enough for a base. It's just the right side. It hasn't come up enough on it to suggest that, which is also a reason why it's probably too early for a buy point. Even if it gets above the 50-day line, it's above the 1,000 level, which is nice. In my view, even getting above the 50-day line probably wouldn't be enough. That's just for me. I would think more like a downward sloping trend line. And then there would probably be an official buy point. I'm thinking this is going to be a double bottom base. That'd be around 1202. But I don't know how you might see it differently. You've got your own thing because you have played Tesla, so you might have a little bit different mindset on this one.
Yeah, with a little bit of cushion, I feel like I do have the option of kind of using the cushion I had from earlier this year, the gains that I had from earlier this year, because I was selling into strength a little bit under 1200. But there were some things that made me nervous. As much as this was a nice tightening action as it came up in that 730, 740 area, very tight action, really strong move. And then the volatility just really increased. It's not typical that you see something that breaks out and just gets rid of all of the gains. That was a 38% gain from its official breakout. Again, I think there was an earlier entry around 730, but still, it erased a lot of gains very quickly. Certainly a decline below that 10-week moving average line. That's a sell signal. So I think in a lot of ways it was showing quite a bit of damage, and something that was maybe better to sidestep. But there it was, support right there at 900, and that's hard to ignore that it got support exactly at the top of that prior base.
But just like with the markets, I would just say, and again with a lot of these stocks, we've seen some big moves in this volatile action up and then some big ones down. So that's why, it looks good. It's hard not to look at it because you can just hey, what if I just draw a line from this? Right. It'll be at 3,000 in a week. It's like, but that's where it's difficult to know in a choppy market. Is this going to move higher or not? And it's a nice move though today for sure.
Yeah, and I mean, you look at a 7.5% move today. Well, if it kind of comes in a little bit. Well, if you bought at the peak today, how much room do you give it? I'm sure a lot of people are saying, gosh, Ed, what's wrong with you? How could you say wait until it gets to 1,100 or higher? That's an extra 10% that I'd be missing out on, which again, feels wrong. But sometimes it's better to wait and pay a higher price if the odds get more in your favor. Okay, let's go ahead and take. Oh, go ahead.
Just one more thing. If it did that, it would probably also reflect that the market had really strengthened, and you'd probably feel more confident, not just about this stock, but about the market. So that's an extra reason to do it, because right now you don't know where the market's going to go tomorrow. But if we got Tesla up to that level, like 1100, chances are we'd be talking about a market that's really picking up momentum.
And the NASDAQ probably at new highs at that point. So let's go ahead and take a look at another one of the groups that has been very strong, and one of the group leaders, Fortinet. FTNT is the ticker symbol on this in the computer software security group. This group is number 18. It's been one of the biggest gainers of this year, but Fortinet certainly has been one of the leaders. This latest downtrend, though, is it time for it to come back on our radar?
Yeah, I mean, you can have different opinions on this one. I mean, it definitely broke here, but then a lot of software broke. This held up better than a lot of software makers, and there's some signs. Some software makers are coming back, and definitely Fortinet's one of those leaders. The RS line is close to new highs. It sort of broke this trend line. You could sort of see this is short-term resistance. It's not far from a new buy point, not far from the 50-day line still. So all this was sort of actionable. I don't really like the volume. The volume was pretty light the past couple of days. So there's that. I mean, volume may really dry up going forward for the next several days. I mean, Tesla had above average volume today, so it wasn't something that couldn't have happened. So there's a lot to like about it. It's probably still actionable because it's not too far away from things. But do you take a chance? Obviously, if the market comes down, we saw what software did. It held up for a while, and then even Fortinet broke. We saw Zscaler break. We saw the last ones hold out. Maybe this will be leading the charge in software, or maybe it's just another false move.
I will say that one thing I do like about this pattern here is if you look at last week, we had the follow-through day. Fortinet was certainly one of the stronger stocks on that day. It was really moving up, in a very solid way on the follow-through day that we had on Wednesday. And while it did come in the next day, as did the market, this really held up, I feel, a lot better than the market did. The market was starting to test its, December 3rd lows. The NASDAQ undercut it. The S&P 500 held above it. But Fortinet really just held the gains for the most part of the follow-through day that happened last week. So that is one thing that I think makes the relative strength line look a little bit more positive and this stock look a little bit more positive. So let's go ahead and wrap things up with ICON. This is ICLR. This is one of the contract research organizations, in the medical research field. I always think of these as, your picks and shovel play. Doesn't matter who wins on a lot of these pharmaceutical plays. They're going to be providing a lot of the services that they need, and whether the trial wins or loses, you're still going to need their services. What's your take on this big move from something that normally doesn't have such volatile action?
Well, it has had a couple of volatile actions down here, but it's like it made a recent acquisition and made it a lot larger. So that's one reason why the revenue suddenly doubled in the latest quarter. But still, they've had rapid growth before then. Strong leader in that regard. Then a lot of medicals are doing well, and including in sort of this area, sort of picks and shovels. There's a lot of picks and shovel plays in the medical field that are doing well. Technically broke out. In some ways, you could almost argue it's getting extended, because I sort of feel like this was the real breakout era, not 292. I haven't done the math on it, but you're probably right at the edge of the buy zone from that. But really powerful, really strong volume, no problem there. And the RS line at a new high. And when you break out or in a base and the RS line is at a new high, that's a blue dot. That's really impressive to see that relative strength line hitting a new high. And so a lot of bullish action in that regard.
Yes, absolutely. And this is something that was added to leaderboard this morning. So very early on in the move, as it was starting to power higher. And I should also disclose that I do have a position in ICLR myself and a smaller position in Tesla. So I think that'll wrap it up for us today. Ed, any final thoughts on what investors should do now, especially heading into a Christmas holiday?
Well, I think as you were saying, before, if you do make buys, sort of tiptoe in and then let the stocks, let the market, sort of pull you in from there. Don't try to say like, I'm excited. Let me go from 10% invested to 110%.
Right.
It's like this. Don't treat the market like it's a Tesla, trying to go as fast as you can. Sort of slowly pick up steam, especially in a market like this that is choppy. And if it works, then you can add to it. And if this market has legs, you'll have plenty of time to make gains. And if it doesn't work, you can get out without really having too much damage.
Good plan of action. Thanks for that, Ed. And we will be right back here tomorrow at the close, regular day of trading tomorrow and right before the holiday. So we'll see you back here on Stock Market Today after the close at 1 o'clock Pacific time, 4 p.m. Eastern time. And if you haven't already checked us out on IBD Live, we'll be breaking down the action as it happens in the morning after the morning bell, starting at 6:20 Pacific time. That's 9:20 Eastern time, and going for at least an hour and a half. So, please do join us for that. You can always get more information at investors.com/IBD Live. Thanks a lot for watching us today, and we'll see you back here tomorrow.